Hi, I am Balasubramanian, Chief Portfolio Strategist for Equities. Market outlook. The month that passed by saw global markets moving up while the Indian market remained muted as well as and the Indian market also posted negative returns. The market was concerned about the trade impact between US and China, and the market was looking forward for the resolution of the same in the G20 meet towards the end of the month. Going forward, market will try to react based on the movement of the monsoon as well as the dispersion across the country, as well as how the market treats the announcement of regarding fiscal budget as well as minimum shareholding would be keenly watched. No major negativity has been observed so far. The first budget of the second term of the NDA government addressed three key parameters. The first one was fiscal prudence. The government maintained a fiscal deficit stance of 3.30, which is a welcome move and it may provide long-term stability. The second one, the government tried to address is a bold move in terms of addressing NBFC concerns as well as recapitalization of the banks, public sector banks. This is a bold and the most welcome move. And the third important measure the government took was maintain minimum public shareholding of 35% from the 25% at present, the effect of which should be seen in the days to come. We have already launched a new scheme, Mahindra Hybrid Equity Nivesh Yojana, which is a hybrid fund which has 25 to 35% exposure in debt and the remaining in equity. While the debt is expected to provide a stable income, the equity is expected to generate alpha for the investors. Scheme-specific strategies. There has been no change in the strategy which what we followed in the last month. The strategy would remain the same, but for the sake of recall, I would like to highlight the strategies. The first one, Mahindra Karbajat Yojana. This is a multi-cap fund. The exposure is mostly into large cap and mid and small cap to a lesser extent. Currently, the portfolio is focused on large cap stocks. The scheme invests in companies with moat and companies which have ability to withstand different market cycles. Mahindra Mutual Fund Badat Yojana. This scheme also follows a multi-cap strategy. The scheme is heavily into large cap and also to some mid-cap stocks. Though the scheme is currently focused on large caps, we have started increasing allocation to mid-cap and to some extent to small caps, and this trend is expected to continue. Mahindra Mutual Fund Unnati Emerging Business Yojana. This is a pure mid-cap fund which 65% minimum holding in stocks that are mid-cap and the remaining in large and small caps. Currently, the portfolio has around 67% in mid-cap and around 30% in large cap and smaller extent to small cap. The scheme tries to invest in leaders or emerging leaders which can withstand different market cycles, and that has a moat structure also. Mahindra Mutual Fund Rural Bharat Consumption Yojana. The scheme focuses on rural financing, consumption, rural infrastructure. The scheme has a concentrated portfolio of 28 stocks. The scheme tries to invest in companies that have strong leadership, growth opportunities and high earning potential. Mahindra Pragati Blue Chip Yojana. This is a large cap portfolio. Minimum 80% of the portfolio will be of large cap stocks. The scheme has around 24 stocks at this moment with equal allocation to each stocks. The scheme invests in market leaders, high growth potential, as well as companies that have good corporate governance. Mahindra Dhan Sanchay Equity Savings Yojana. This again is a hybrid equity fund with around 50% of the portfolio in equity, around 15% of portfolio in arbitrage and remaining in debt. The equity portion of the portfolio consists mostly of large cap stocks. Going forward, it is possible that we may re-evaluate the market capitalization mix in the portfolio.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.